Welcome back to The Pursuit of Everything with Levi Wanner. Today I'm joined with Cozi, my sister. We're going to do a little state of the market, how we're going into the fourth quarter in real estate and how everything is shaping up in our real estate market. We'll call it the State of the Union.
I love that. I was actually thinking that myself.
So we all know we've talked about separation season before, third quarter, fourth quarter separation season, getting ready to start off the fourth quarter and head into the new year. So let's just kind of start with a little overview, what you think is going on with the market right now.
So I actually, right before we came in here, I just kind of geeked out on some market stats. So from what I'm hearing is, buyers and sellers right now, especially in our area, well, I'm sure everywhere, think that they're kind of waiting for the bottom to fall out and for prices to drop and all these things to happen, which it's been, I feel like 2 years of people waiting for that to happen.
Everyone's always waiting for that.
And it hasn't happened. I also heard someone say, like, the one thing you hear people say about real estate is like, oh, I wish I would have bought a house 5 years ago. Mm-hmm. No one ever says like, hey, I'm really glad I didn't buy that house.
Right. I'm really glad I waited.
Yes.
Yeah.
It never happens.
No. And we always, we're in Montana and other markets are completely different. And we always say that it's kind of nice to be in Montana because the trends always hit us last and we can kind of look at it, what's happening on the East Coast and the West Coast and see what's happening in those bigger markets, and then it trickles to us slowly.
Right. But everything in the country is kind of all over the place as well. So like the Northeast right now is a major seller's market with multiple offers. But then a lot of the like larger cities are the ones that hit the big boom with COVID, right? Like Austin, Texas, Vegas, like places like that. They're now in a buyer's market.
They're definitely in a buyer's market. I just saw Phoenix is down like 20%.
Right.
And so if you bought at that peak market, then you're not in trouble, but you got to wait for it to come back.
Right.
What are you actually seeing on the ground of the average person that's scrolling headlines that they're missing?
I think that it's not like a doomsday, mm-hmm. right? Like there's the good news about it is I feel like people got used to that like COVID era of real estate where it was your house sold in a week. You didn't really have to negotiate. This is when like professional realtors are really going to shine right now. Like you have to be able to negotiate. You have to be able to market. You have to be able to sell a house. To where before, right, like during COVID, to sell a house, you threw a sign in the yard and we're like, hey, I'm going to look at offers in 3 days. Come with your best. But that's also where real estate professionals got in trouble with that lawsuit is because the sellers didn't think we were doing anything.
Right, because they really were.
Well, because of the way the market was.
Yeah.
So it's just back to kind of pre-COVID, and back to kind of a normal market where you need a professional in your corner to negotiate for you and do those things, and it's not just pay throw your house on the market.
Right. I think it's actually a normal market. I wouldn't call it a buyer's or a seller's market right now. It's an actual normal market, and interest rates being in the sixes is good for a healthy economy. It's not. We should never get back to those 2% interest rates because that's what causes inflation.
Absolutely.
What are you doing marketing wise to separate yourself from your competition?
It's just kind of like back to basics of a lot of you have to kind of pivot now. And well, you started real estate so long ago. Well, I guess the question for you, what's the difference of how you marketed pre-internet in the dinosaur?
Back in the dinosaur ages, I mean, it's the same principles. It's just a different method. Okay. Like we would get Yellow Page ads, or you join a big franchise to where people would walk in the door, make the call. They call every Monday. They drive by a house and they call Century 21. Where now I think it's all about branding and you have to be out in the public eye showing that you're selling houses because people aren't going to the Remaxes of the world. Right. that level of trust isn't there. Now it's social media. Now it's having a website. It's having places that the consumer can go and find you in your personal brand, not your your franchise that they trust.
Right.
But again, like you said, it's right back to the basics.
Yeah.
We had this conversation a couple of weeks ago where I don't want to be 50 years old doing open houses. And then I sell a house at an open house that very weekend. So back to the basics, open houses, taking care of your clients.
And again, with the internet marketing kind of thing of it, really good professional pictures of the houses, right? Like,
don't take your iPhone pictures.
No, you do still see people.
Don't do it. Yeah. We do a lot of video walkthroughs of our listings, things to get the consumer to look at those houses. So to me the feet on the ground marketing is the best. Yes. The guerrilla marketing is always the best. How much do you think interest rates really change the behavior of the buyer? And is there just noise, or is it really a supply and demand issue?
I think it's just noise, but it's crazy how people fall for it. Right. So really, right, like you said, this is just kind of a normal market. A 6% interest rate is a pretty normal interest rate.
When I bought my first house, it was 6.5% interest rate, and my loan originator told me, you're never going to see it lower than this, because that was early 2000s, and they were just coming out of 8s and 9s.
Right.
And our dad told us that he bought his first house in the early 80s at an 18% interest rate.
Right.
So people got used to that 2% COVID correction that they think they're going to get that.
Yes. Yeah, and then and I still feel like there's people waiting for rates to come down, which, I mean, so what's funny about it is think about right when rates shot up and everyone was doing like the 2-1 buy downs. We did a 2-1 buy down, or a few of them, and then all of a sudden we just had the people call and they're already where they should be in their rate. So I guess for people listening that don't know what the 2-1 buy down was, it was you have your normal interest rate, you can buy down the rate 2 points the first year, 1 point the second year, and then year 3 it goes to 8% or whatever the rate was at that time. They were already back up to their rate, and I told them, I said, who saw this coming? Right. We thought rates would be down by then, the lenders thought rates would be down by then, and they're not. So
all the media was saying the rates are going to get cut, and I'm turned into quite the dork of trying to research rates and the Fed and stuff. And 1 month it'll say one thing, the next month, a month ago they were saying at the September Fed meeting it was a 95% chance we were going to see rate cuts, and then now I'm reading it's like 50-50. So they go off of the inflation reports and the jobs reports and stuff, which all of those numbers are inflated to however they want them to read. Yes. So it's a real tricky spot to be playing the interest rate game. That comes to my next question. If you were a buyer right now, what's the number one mistake that they're making, and what should they be doing?
Waiting.
Right. The number one, yeah.
So just like we can't predict when rates are going to come down, we can't really predict when they're going to go up. The other good thing about buying a house right now is we are in a market where you can negotiate, right? Yep. You're not, and you have options, right? You can go look at a house. We could go look at 15 houses, and then 2 days later, we can go revisit your top 2, and they're still going to be on the market.
Yeah,
right?
Absolutely.
You're not like rushing into buying something that you don't necessarily love because the market's so crazy. So it's like, buy now. Again, like we talked about earlier, nobody says like, man, I'm glad I waited 5 years.
And we still have a low inventory of homes, and I think that's nationwide. It's definitely for sure in Montana. But if you're waiting for those rates to go down to buy, and then the rates go down, and then everybody else is buying, then the prices are going to get driven up.
And then you're going to be into that rushing to get into a house thing because now the market's flooded.
And for me, as I've been buying real estate and selling real estate for 20 years, I don't mind buying at a higher rate because you can always refinance. But you can't go back and renegotiate the price of that house. You can negotiate a lower price, pay a little more in interest, and then when interest does go into the 4s, then you can refinance and then you win on both ends.
So here's remember I told you right before we came in here, I kind of geeked out on numbers. And my thing that I geeked out on a little bit was I had listened to something saying that, right, those areas that were like super hot during COVID are now the ones kind of cooling off faster. So listen to this, since we're in 3 different markets in Montana, I ran months of inventory and days on market in Billings, Bozeman, Helena markets. So Billings during COVID, that whole boom was the slowest, right? And then I would say Bozeman was the hottest, and then Helena was kind of right behind Bozeman on people moving in from out of state and coming into the area. So, and then also days on market kind of tells you where the market's sitting, right? So Billings, interesting enough, in March of 21, our days on market was 7.
Wow.
Right now, it's 25.
Pretty good still.
Pretty good still.
Pretty even market.
Yes. Billings has 4 months of inventory currently. So anything over 6 months of inventory is considered a buyer's market. Under 6 months is a seller's market, and at 6 months it's even, right? Okay, Bozeman. So Bozeman was the hottest, right, with people moving in COVID. Today, their average days on market, I was shocked, is 75.
Wow.
And they have 8 months of inventory.
Oh, so it's a buyer's market.
Yes. Helena. Today, the average day on market, 46. Remember, and I said Billings was 25. And they have 8 months of inventory as well.
So, and going back to the buyer's perspective, right now is a good time to buy there because you can negotiate the price, and then, but once interest rates go down, those will be the fastest markets to catch up.
Yes. Then we could also get into a whole discussion of like the cost of things in Bozeman.
Well, and we'll get to that here because I'm going to say let's flip it to if you're talking to a seller, what's the number one mistake the sellers are making, and what can they do to
overprice
it?
Yeah, like it's crazy that they should be really in-depth questions, but they're easy, right? Like, and that's because as a seller, if you're trying to sell for what your house was worth in 23, you're not going to get it, right? The market's changed,
right?
It has, the bottom hasn't fallen out, but it's shifted, and you have to shift with it. So you need to go off of the comps, which is what we're here to do, is educate and help make a decision.
And it is harder to do that than it was in the past because we had the pandemic era to where a house down the street in 21 probably sold for $60,000 higher than what it will sell for right now. That's why Cozi goes by. We always have this fun push and pull when we list a house. Cozi likes to go on the comps, what is sold in the last 6 months to a year. I like to price homes out at what our competition is, what's actively on the market, what they're priced at, what amenities they have, things like that.
Which is a great way to do it now too. Well, it's always been a good way to do it too, right? You got to look at both sides. But when you're selling your house right now, you are in a fierce battle with every other house on the market in your area, right? You have to look the best. You have to be priced the best. You have to be the most competitive. You are competing because there's not as many buyers with your neighbor. It's
the theme of the podcast so far is we got to get back to basics.
Yes.
Your house has to be clean. You have to be willing to show your house at all times. You can't, you can't
sell a house that you can't show.
Exactly. Yeah.
Right.
And so we kind of talked about regionally and then nationally, like we like to watch those markets and because the Montana market's different and it trends different. So are markets splitting into winners and losers right now, or is this a trend that people want to see that they always win in a negotiation or they lose? Are the buyers, are they coming at it more competitively, or are they more like fiscally responsible?
I think it depends on the person. Right? Yeah. It depends on the person and how they're looking at it. Some people just feel like they have to get a deal, right? So this is the perfect market for them. Is that person that feels like they have to get a deal. Also, as a professional, it's our job to kind of educate them on hey, this house is priced competitively. It's, it's a little overpriced. Here's what the comps look like in the area, that kind of thing. So
absolutely. And the people that are always looking for a deal, I feel like they're never satisfied. Like right now is the time to go buy.
Yes.
Right. I mean, because it's as good as it's going to get. Like we talked about, because when interest rates go down, there's going to be less inventory. Sellers aren't going to be willing to sell. And then coming from a new construction point, inventory is going to be low, so that's going to drive costs up. Then when that happens, then the commodities go higher. Wood's more expensive, plastic's more expensive. Everything, all the materials and labor gets more expensive.
yes.
So then the cost of a new house is going to go up. So I feel like those people that are always looking to win that negotiation never feel like they win until it's like 5 years down the road.
Right.
So it's hard to deal with those clients that do that. How are investors playing this market compared to first time home buyers, or is it two totally different games?
That's two totally different games. It's and it's an emotional thing, right?
Mm-hmm.
Like a first time home buyer, they're emotional. It's their biggest investment. It's right. It's their home. An investor, it's like they've probably been through a market like this before.
There's no emotions involved,
right? And they're seeing the opportunity.
Absolutely, yeah. And speaking from someone who researches this, you're seeing the big investors, the BlackRocks, buying up so many houses, and that's driving house prices up as well.
Absolutely.
And we should be following that guideline of what the big hedge funds are doing as investors. So
also, interestingly enough, kind of getting back to the rates part of it and what's happening like nationally, I also heard that the stock of home builders, like in the stock market, is shooting up.
Well, I was just going to bring that up. I'll probably do a reel on this, that Warren Buffett just invested $800 million into the largest stocks in home building. So the KB Homes, the Lesners, that kind of stuff. So when a guy like Warren Buffett invests, you follow this market.
Well, and I think what you tell me, if you think I'm on this, they're investing because they're seeing that the rates are going to trend. Like the interest rates are kind of pushing that.
Right. And so they're saying it's maybe 50-50 in September that rates are going to go down. They'll cut them 2 more times by the end of the year. But the caveat to that is in February, the Fed chairman, Jerome Powell's term is up. If Trump doesn't get him out before, which he's trying very hard to, then Trump will put in whatever puppet that he's got lined up, and then we will see rates dramatically fall.
Which we don't need. Right?
We don't.
Like it'll put us just back into the same spot.
Absolutely.
Right
now. I like what Jerome Powell's doing, because we had the 2% interest rates, and that just drove inflation up. But he's doing it very conservatively. He's just going on the numbers. And the Fed is not supposed to be a political entity. It's supposed to be independent, and it's not normally.
Right.
But I do think Jerome Powell's doing that, and I geek out on that kind of stuff.
So if they would just get us down into the 5s with like a slow cut and not cut us down into 2, because it's literally just the same things. Well, it'll just be cyclical, right? Where it's like, okay, then the market will go crazy.
Yeah.
And then it'll.
As a builder, I want that.
I'm sure you do.
but then it's a stressful time. Commodities will go through the roof. Pricing is tough. That kind of stuff. What do you wish an average buyer or seller understood about negotiating in today's market that could save them money? Let's go back to the seller, right? Because you've got a couple that wanted to price super high and went against your market analysis.
Realistically, this is something I need to be better at. I need to be better at like presenting the facts and the stats to people, because if you look at it, like if you overprice your house, you end up selling normally like 8 to 10% under what it's actually valued at, because the longer it sits on the market. And I know this from experience. If I'm out showing houses and the house has been on the market for 3 months and they keep cutting the price, blood in the water, right? Like I'm like, they're desperate. They overpriced. I'm going to go in there and lowball it.
Oh, for sure.
Right.
For sure.
But I just that is something I need to work on, is presenting better facts to people and showing them the statistics, not just telling them like, hey, if you did that and I saw it, I'd come attack you, right? Like people, a lot of people don't hear that.
Yeah, I do think presenting the facts is probably the best way to go with people like that. And then buyers, I think we've covered that, right? Like buy now, refinance when the rate goes down.
I honestly never think it's a bad time to buy. There's never really been a market where I've been like, it's a terrible time to buy. It's definitely been harder for people.
Oh, absolutely.
But
yeah. And then last question, looking ahead 5 years, what's the move? Where's the opportunity for someone who wants to build wealth in real estate?
I think we kind of already covered that too. Like you buy now when the stocks are going crazy. Yep. Warren Buffett's buying
absolutely.
Right? That's when you buy.
Yeah. And as an investor, I buy every year regardless. And because the appreciation, the tax benefits, everything like that go up every year, real estate's the safest bet that I've found. Or following Warren Buffett, obviously. So to me, to end this, we'll just say sellers need to be real smart about how they're pricing, keeping their homes presentable, be convenient with showings, and buyers need to negotiate the best deal right now before the sharks are in the water with the low interest rates. So, well, that's our State of the Union for the market right now. Hit us up if you have any questions. Levi Wanner on Instagram. Thank you.
How long is it?